Hello, and welcome back to Market Wake Up. My name is Jordon, this is Jon, and you're in the one-stop shop to get up to date with everything that you need to know in the macro trading world. We're going to be breaking down the macro mumbo jumbo and turn them into actionable trade ideas. Jon, the title is just straight from the heart today. This is how I feel walking into this week and how I felt all of last week. I can't even say it because YouTube won't allow us. But if you haven't read the title, I don't know how you've ended up here. That's what we're going to be discussing today. Let's get up to date with what is happening. Welcome to Market Wake Up. Hello, Jon. Happy Monday. Happy Monday. Welcome back into the office, the Market Wake Up office. We're here again to talk about the week ahead and the week we've had.
Yep.
Where do we start?
Whew, that's a really good question, Jordan. That is a really good question. We can start with jobs numbers if you want to. We can start with jobs numbers if you want.
I love how NFP is our ease into it headline.
I know.
The jobs report is okay. But let's break into it with the jobs report. But that's not actually it's not a bad place to run to. Are you surprised? 4.1 from 4. No
surprise for me. Especially now, I'm really like tracking the unemployment claims right now. Because I'm trying to build out my little macro indicator. So I'm kind of like tracking all these little figures a little bit more closely than I used to. So
what figures you're leaning into?
Well, this is the thing. I'm still trying to kind of build it out a little bit. So I'm trying to figure out a way of how to put the data in an order that would be most important, because we know the economic calendar. Our frustration with the economic calendar is it just kind of gives you high impact, medium impact, low impact.
Yeah, it's like a rolling average based on what's previously happened, not what the market's looking at.
Yeah, so I'm trying to figure out a way of having to kind of like categorize these sort of elements of macro data that is of sort of higher importance and lower importance. But obviously employment is high regardless, right? Employment is a huge part of an economy in my eyes. So, that is always of high importance. So, I'm trying to categorize these in a way that would be, someone just went to me last week, why don't you just get an AI thing to do it? And I was like, because I don't know what I'm doing myself at the minute with it. I've got to work that bit out first, and then I'll try and automate it in some way in the future. I'm trying to figure out a way of how to kind of categorize all the data, because we know that sometimes the market shifts focus to certain parts of data. There was a big element in the UK at the moment that it shifted to GDP, for instance. So I've got to try and figure out a way of how to kind of organize that a little bit. Employment in the US is a big factor regardless. The unemployment claims I've been tracking quite closely, and I saw that was upticking throughout all of kind of last month. So there was an element to me that was like, the unemployment rate could come in a little bit higher. I wouldn't be surprised if it came in at like 0.1% higher, and it did. So I don't think that was necessarily a shock to the market, to be honest. And then with the whole situation of Dodge coming in and cutting government jobs and whatnot, I don't think this is necessarily the end of that story either. So, it's going to be key to watch that going forward regardless.
I'm fascinated by the little tool you're building there.
I want to show you. Should I show you?
I like building systems, and I like.
It's not very comprehensive right now.
I've already got an idea in my brain how I would do it.
Oh, okay. Well, I'd like to get your thoughts on it then, because
I can visualize. Oh, this is what I would do, and it would almost be like a traffic light system.
Oh, okay. So this is what. Oh, sorry, I'm not even adding the screen. This is what I've got so far, right? So I'm trying to do each economy and kind of the most important pieces of it.
Yeah, Sorry.
I still feel like there's elements that's not in here yet that I need to add into it, because I also want to make it to a point where it needs to be equal, because I want to try and create almost like a strength meter from it. You know how I've got my other strength meter. I want to kind of, gauge that as well. So at the moment, I've just got some basic data in there, some things that I feel like are high impact at the minute. And then I'm focusing on sort of the actual forecasted, the change in that as well, and what it was from previously. And the reason why I'm looking at sort of actual and forecasted is because if something goes beyond the forecast, I feel like then that's a surprise to the market. So I'm kind of calculating the difference there rather than the previous. And then I'm trying to come up with like a scoring system in my head. So I'm thinking, right, okay, what if something it beats expectations, but also beats the previous, can that have a score metric? And then can I try and work it out like that? But this is where I'm at the moment. There's a couple of different things that I wanted to kind of keep in here and add in here, sort of like the commitment to trader reports. I'm very familiar with that. So I know I can try and, look at that as well to get some kind of interest into how hedge funds are kind of looking at the market. I'm also looking at kind of like the Fed watch, the change on a week-to-week basis, also looking at the difference between 2-year yields and the current US interest rate as well, to see what the market's trying to price in to. So this is where it's at right now. It's not very comprehensive, but this is just it. And it's been there for about 4 weeks now, and I'm just plotting, on each one. So
I like it.
Thanks, man.
What you want it to essentially square up all the currencies and go against each other to show the stronger and the weakest on the macro scale.
Yeah, because I've got
on current data or on trajectory.
So on current, it's going to always be on sort of current. It's going to be on actual data.
So it'll be outdated.
Yeah, so it'll be outdated, yeah. But at the same time, it's kind of like if I try and predict what's happening going forward, I think that's going to be very difficult to do from a forecasted point of view. If it's there, it can be easily got at. So if I wanted to try and automate this in the future, how am I going to get that to focus? Because if it misses data and things like that, it's going to be hard to do.
Unemployment's at 10.6 coming out today, forecasted at 4. Hang on a minute.
Yeah, exactly. So I'm just trying to kind of come up with a way. It's not, obviously, again, this is just something that just adds a layer on top of what you already do. Do you know what I mean? Like, I don't feel like I necessarily need this in my trading, because I feel like my trading's okay anyway. But it's something that I feel would help me, because that's where the tools have got to come from. It's got to come from a place of how is it going to help me? But otherwise, it's pointless in building one in the first place. So my thought process is, this is going to help me just quickly navigate through economies. I can then add this as a layer of what I'm already doing in regards to the currency strength meter, and then adding that layer of what the conditions are within the market and things like that. So, I mean, it's been pretty useful so far. I must admit, it's kind of helped me keep on my path of dollar weakness for the moment, seeing that we've seen a lot of forecasted data being sort of beaten to the downside. And you can see there's quite a lot of red on the board when it comes to the change area. So, that to me was very much, okay, well, I'm going to stay sort of dollar weak for the next week at least, until I get a next sort of fresh data, and I input that data every day. So, Yeah,
you've even got a point system too, a strength and weakness meter.
Yeah, that's what I'm trying to navigate right now. I'm trying to think of how can I.
Yeah, well, you got to wait. You need a weighting system.
I need a weight.
On what carries more points and what doesn't.
Yeah, that's what I need to try and work out. I don't know whether to try and keep it super simple for now and use what the economic indicator is classing as. I don't want to do it, but classing as red folder, medium folder news and whatnot.
But I wouldn't, because economic calendars are basing it on volatility, not on impact.
Exactly.
Right, so they think that exact release will be volatile. They don't think the long-term impact from that release will be relevant.
No.
And I think here you're looking more of that long-term. I would try and group a few.
Yeah. Yeah.
I would try and group a few, things like services and manufacturing PMI. Obviously, manufacturing services are so important to be looking at in the economy. And then it depends on the economy you're looking at as well.
Exactly.
But if you dive into those folders, they'll give you a lot of information on employment and business conditions, which can then lean into, obviously, unemployment rate, NFP, initial jobs claims, JOLTS jobs. You could argue even consumer confidence, all being related to some kind of employment there. You could probably group those and then get a metric system in there and give you one overall for employment. Same for when you go into PCE, CPI, PPI even, really dive into their industrial production and manufacturing PMI can be grouped. So I think there's ways you can probably find, and that's how I was thinking red light, green light.
Yeah.
Okay. So when you first said this idea, the way my brain worked is I saw 4 tabs along the top that said employment, manufacturing, services, exports, imports. The bulk, the main thing, depending on the economy you're looking at.
Yeah.
And then a chain link from each of those on where the hints are sitting. One of the best things about the Australian services PMI report is there actually is employment data inside that services PMI, and that trend is sometimes so reliable on picking where the jobs report comes out. Honestly, it amazes me how many people just don't read the report. You get the information you need, just read the report. But so little things like that. If I were looking at jobs and I've seen that, okay, hey, services PMI and manufacturing PMI have both increased the employment. Yeah, that's pretty good indication that employment rate might come in a little bit harder. So like I mind mapped it and I'm drifting it back in to be like, is this red? Is this green? What you look straight away, okay, what do the Fed care about? What do investors care about right now? I think right now probably employment is the red flag for the US economy. Anywhere else is too volatile to try and get a read on. I think everyone's looking at that employment situation going, okay, Trump's out there promising he's going to bring jobs. We're going to bring jobs. He might in the long term, but in the short term, he's cutting a lot of jobs. So what's that rate going to do? And if you can just click on it and it shows the full metric of the employment situation, it can give you a little bit of a, hey, we're good, or hey, we're no good. But that's just I'm getting excited.
You're exactly right, because I've had the exact same thoughts, to be honest. And I was speaking because my dad trades as well. So I went, I saw my dad on Friday and I was showing him and he was like, oh yeah, that's really good, but like what, he kind of looks at, he kind of looked at it and was like, there's a lot going on just in that moment. Like it'd be nice if it was grouped. And I said, what, that is an idea I've had, is to kind of do it by sort of like employment
by like sector, almost.
Do it by sectors instead, because then you can have almost like you could have almost a sector review on each one as well, and
if you can find out that all investors over the next 4 months only care about employment, then you can ignore the rest of the manufacturing and retail sales, and you can go, hey, this is where investors are looking and my metrics are telling me this is going to get worse. Hey, lo and behold, I got a trade idea.
Exactly. Yeah, and that's what it's about, isn't it? It's about trying to put yourself in the best position possible going forward in your plans, and your actions and stuff. So, no, I like that idea. I've definitely had that idea. Well, my dad did anyway as well. So, this is version 0.1.
Concept.
I'm sure. Concept, concept. Yeah. This is concept. I've done it for the UK as well, but the UK is a lot shorter because there's a lot almost. I would say there's less stuff going on in the UK that is as important. So that was also
sorry.
I
think their problem is macro.
Yeah. You taking a dig there?
No. I mean, I think their problem is not in their control. I think their main concerns are what happens in Europe, what the US do. They're internally, I think they're actually reasonably stable looking at an economy, but their biggest risks right now are external. How does this system? There's another. How does this system incorporate the macro risk? We're talking macro.
Yeah.
Hey, the title. I mean, The title of the stream sums it up. We're talking macro.
Yeah, we're talking macro.
We've gone so far out, but no, I like it. I like the idea. You've got my brain ticking. If you can't tell, I'm already sitting there going, "Oh, you should do this.
Yeah.
What about this?"
Yeah.
But anyway, let's talk about the jobs numbers. 4.1% from 4%. Ah, yeah. Look, there we go.
There you go.
Missed expectations, obviously upticked 0.1%. I think it was heavily expected, at least from our perspective. I mean, I'm looking at a lot of the calendars and they weren't expecting an uptick, but I don't know why. I think it will continue as well. I don't think 4.1 is a top out for the US when it comes to unemployment. I honestly think we can get to 5.
I mean, if we do, that's big trouble. That's big trouble. 5's usually the tipping point of where we go into a recession, isn't it? So I think if we get up to 5, then it's going to spell this sort of what we're seeing, especially across the US stock market at the moment. That spells kind of a deeper correction than what we're kind of looking at right now. Which, I saw something this morning about a lot of analysts looking at sort of Q3 of this year as being one metric went up, which kind of highlighted that Q3 this year could be heightened in recession. So for the US, so that would usually you'd see an uptick in unemployment because of that. So yeah, I think it's going to be a good one to look out for. I think metrics for me right now, like we're talking about jobs numbers, definitely a key one to look out for. But we can definitely consider consumer sentiment going forward as well, because if the consumer isn't spending in the economy, then they're going to struggle. There could be even a point where they run into a bit of deflation potentially. I know there's a lot of talk of stagflation at the moment, but if that sort of demand dries up, then it's going to be really interesting to kind of navigate those type of markets. So things like that, industrial production as well, I'll keep an eye on going forward as well to see if there's any kind of decline there. But usually if we see downside in those metrics, then it is spelling a pretty awful sort of outcome. I mean,
remove your cap. Remove your knowledgeable cap. All right, take it off and look at the market. S&P 500 running like it is, oil running like it is, the dollar running like it is, uptick in unemployment. I think we can get to 5, right? Yeah. I really do. I know a lot of analysts are predicting 4.4, 4.5. I'm going to go a little bit ballsier and say 5. The way the market's moving at the moment tells me that people are betting on that. Yeah. Maybe not 5, but they're betting on a recession. The market is betting on a recession. So the way that Trump is going about his thing, and he's already got this in his interviews, right? It's short-term pain, long-term gain. And we know it was a rip the Band-Aid. Hey, this is going to hurt us, but in 10 years' time, we're going to be back to being a superpower. This is what we need to do. I think a recession is a good bet. Not a good thing, a good bet. I do think it will come in, and I think that an unemployment rate, when that gets to 4.2, 4.3, that's when the markets will really go, oh yeah, we're going to have one. And I don't think we'll get a V bottom like we have with the last 2 recessions, technical recessions that we've had. No. I think we'll get a little bit more of a prolonged journey before we can come back out. That's how I see the US situation, regardless of the volatility on everything else that can happen over there. And trust me, I can talk here for 20 minutes on like what. Not just looking over in the US, but even looking internally here in Australia. Some of the things that have been happening is just like dumbfounding. Yeah. It's honestly, it's phenomenal. I'm sitting there. It's the most entertaining stuff I've ever watched. I'm sitting here going, how are these guys the people we voted in control? I don't know. But regardless, I do think a recession's on the cards for the US. And if I had to put my money where my mouth is, I'd say 70% chance. Yeah,
I think that's fair to say. I think we're kind of seeing it in the pricing already. It's the thing is, it's almost like, because we've had recessions in the past, it's hard to go, okay, is this the moment, right? It's very hard to go, this is the thing that's happening. It's always, you're never going to really go, this is the moment, and it's going to go. I think if you do, then you're obviously a genius, and you've
cracked it.
You've got it right, and I hope you grab it with all you can. Essentially,
I think the track record for people that have called recessions is like 1 in 20.
Yeah, it's got to be wild odds, hasn't it?
Yeah,
because
so like everyone who's called a recession has also called 20 that hasn't happened.
Yeah. You see it all the time in research, don't you? Really, like the amount of, I think we've had recession talks for the past 3-4 years, and the market's rallied into all-time highs and whatnot.
What's the author of Rich Dad Poor Dad?
Robert Kiyosaki.
Oh mate, he's calling one every 6 months. He is phenomenally, like, he is so persistent. I think he's called a recession like every 6 months for the past, I don't know, 20 years. It's been phenomenal.
And he would love a crash, I guess, because that's the narrative, isn't it? Because he will come and swoop up and do whatever he does, leverage debt and borrow, and get loads of property and whatnot, and then crush everybody else. So people that usually call a recession have a narrative, don't they?
Oh yeah, they have a want.
They have a want. Why
I don't have a want.
Yeah.
Hang on. I don't have a want.
No.
I know I get called a recession.
Disclaimer. Yeah, we don't want.
I have no incentive bias for a recession.
No. But I guess in healthy markets, there has to be some kind of correction, if that was, the way we're going to kind of say it. I don't know. But I mean, look at the market pricing going on at the moment. I mean, the S&P 500 is just broken into these fresh lows here. The Nasdaq getting pounded, really, isn't it? I'm just waiting for some kind of real catalyst. The Russell has really kind of like dropped as well significantly. So I think this could be a market that if I was gonna look at shorting stocks, because that's not something I relatively do. I'm not a big stock index trader anyway. But looking at the Russell right now, I'll be like, this one could probably be impacted the most, I think, because this is obviously your smaller companies who are probably going to find it tougher in recessionary markets anyway. And if they start pricing that in, this market could be the one that goes the most. The Russell will be somewhere where I'm very interested in. Interesting to see the DAX is down today, because obviously the DAX is rallied high. We've had that stimulus coming in from Europe, so that's down also 1.66% today. But I mean, look at that compared to the S&P 500 right now. That is, to
be fair, DAX is a worthy place for me right now. Like, if there's anything flashing to say, it's going to hurt me to say this, if there's anything flashing to say buy me, it's German defense companies, because they've woken up their manufacturing engine again. And what the Germans are like when they manufacture. Holy moly, are they efficient? They are efficient. They are incredible. Like, that's one thing, and I've worked with German employees before. I love their love for systems. Everyone do the job that's been allocated, and it's I don't know where it comes from, but it's just fantastic. The fact that the US pulling out of this Ukraine war has made Germany go, hey, we need to increase our defense spending by 0.4%, I think it is, in 2 years. That doesn't sound like a lot, but that is a lot. Wow, that is incredible. Australia said they're going to up their defense spending 0.3% over 15 years. Germany's doing it 0.4 and 2. So when they wake up that manufacturing giant, like, wow, I think that's going to be impressive. Things, Ryan Mattel, I think a big defense company there. Northrop, I think they're a German. I'm not sure if they're German.
I don't know. I did actually
defense companies over there.
Write a bit about one recently, but I haven't. It's not stuck in my head.
Yeah, that spot. The DAX, and you can see I'm not the only person thinking that.
No, absolutely not. I mean, like, look at the impact it had on the euro last week. I think it had its largest weekly gain in for 5 years or something ridiculous like that. And you can see that the market's going, right, okay, this unfolding of this kind of euro downside narrative has really kind of come into effect now with all this stimulus coming in, because obviously it could positively impact future GDP. And if they're going to start building and pumping money into the system building infrastructure, which is going to last the next 10 years or so, then it just completely changes the narrative here, doesn't it? So yeah, I mean, I didn't manage to catch any of that ride, I must admit. That would have been a fun ride to be on. But I do think that this is something that could potentially last going forward. So it's very interesting markets. I mean, the volatility index as well, creeping higher up into the 25s now. You can really see that this isn't a flash above volatility, and we see a little sort of short-term crash. This is a gradual build-up of fear.
This is
I don't know exactly. And when the market shifts into this is something that I always say. You have that risk on, risk off is so important to understand within the markets, because risk off can usually happen very quickly, can be very hard to get on the back of, because usually it involves sort of panic in the market, and there's kind of like a flash move that goes across sort of stocks, currencies, commodities. But when you start having this gradual build up, it's almost like traders go, is this going to be the quick thing or is it not? And then they try and, front run the move of it coming back below the volatility, and like trying to get back risk on. When you start seeing it going like this and it just very slowly climbing, that is a very, very different situation than just that flash move. So in these type of situations, it's been really good to be a buyer of the yen. I mean, we have to talk about the yen because it's market wake up and it's me. But at the same time, we've been talking about buying Japanese yen, and look at it. It's done super well. Dollar yen is now trading below 149. It's continuing to the downside. I've been selling Aussie yen recently, which has done really well. I've been selling, to be fair, I had a really good trade on Aussie Swiss last week. I sold Aussie Swiss as well, which was really nice. And then I've also tried to sell Swiss yen, but it's been a little bit choppy. So I'm still in this market at the moment. It came very close to my TP, but decided to just reverse on me. But Aussie yen for me is a good market to potentially place ourselves.
The yen calls have been incredible.
Yeah, the yen has been really good. Also,
that might be your trade of 2025.
Yeah, I would say so. Well, it depends if it keeps going. I'm hoping it does, because that would probably be, at the end of the year, I can look back and say, we said that the yen would have a big year, and it did. But that's coming from a place of, what we believe in, fundamentals, everything like that coming together. And it just shows you that if you've got the right sort of mix, you only need one market. If you can milk that market for all it's worth, you can do that,
Yeah, one trade is all you need sometimes, and when everything lines up, and admittedly, at the beginning of this move, I was not convinced. I remember our seasonal webinar, we were chatting a little bit at the end, and I was like, I don't know, I think we can still see a little bit more downside before we see the upside. And that was pretty much at the top there. The date's late Jan, I think that was. So, yeah, you've been calling for that one for quite a while, and I'm glad you made some money on it, because that one would have hurt if you hadn't. But
God, imagine missing out this whole thing. It would have been absolutely crazy. Like, damn, like, what am I doing?
Yeah, Aussie dollar's in a sticky situation at the moment.
Yeah.
We dropped interest rates not too long ago, but I don't really agree with the decision. I think it should have been held a little bit longer. China obviously getting slapped with tariffs. We haven't been hit by the US yet directly. We have indirectly, and then China's been playing their warships all around. They circled the whole of Australia, which was nice. And I think we spoke a little bit about this before. But it was a passenger plane that discovered them, not our military. We had no idea they were there. It was a random passenger plane that said, hey, by the way, there's 3 warships on the coast of your nation. So that was really pleasant. And then in counteract to that, our Prime Minister has suggested that we send troops, peacekeeping troops to Ukraine. Okay, why is the ADF force being put in Ukraine? I couldn't tell you, but that's a story for another day. I think Australia's in this interesting position. Mining's slowing down a little bit, which is a problem. Obviously, demand for that product from China is going to slow down for a little bit. We're hoping it'll uptick with the US doing their thing, but we know that impact is going to be 2-3 years down the track. That's not going to be an instant turnover. They need to build mega factories and sort out shipping routes. So I think a little risk off when looking at the Aussie dollar for the near foreseeable future. The only positive I can see is if recession does come in and gold rockets, that can carry Australia's economy. If we get some real, like we already have been recently, gold mining's huge here. If we get some real push in gold prices, that can carry the Aussie economy.
Oh, absolutely. You know, it's definitely something to keep your eye on. I mean, like we said at the start of the year, I think it's a make or break year for Aussie, isn't it? I think it's just been there's so many external pressures on the Australian market, whereas internally, if you look at the data from an individual basis, I guess it's not been too bad. You know,
it's like not too bad.
If you would take Australia and put it, you know, if you swap the UK and Australia around, it's not too bad. But it's just, I think, because of the external risks right now, it's just getting absolutely hammered, isn't it? I think the market's just down on the fact that we've got to sell risk currencies still, and unfortunately, the Australian dollar is one of those. You know, I know that there was talk of tariffs coming in on metals this week, but not sure if that's going to go ahead. I mean, that's more based on steel and whatnot. So,
if you want to see just how confident Australian investors are in the current climate, shall we say, pull up the XJO, pull up the Oz 200.
Now, what would you want to look at? Do you want to just go for or do you want to go?
Let's go with the Oz 200. You can pull up Pepperstone's index there.
Yeah. Okay.
Yeah. That is what I call confidence.
Yeah. I need to add that as a metric. You know, where's the stock market at the moment?
Yeah. If you want the biggest sentiment indicator you can ever get, that right there is exactly how investors feel about the current climate.
Yeah, that is not great, is it?
No.
Especially when you compare it to sort of the DAX, right? So in my head, I'd be looking, okay, Euro Oz long, you know, just straight off the back of that. I mean, if you're just looking at it from sentiment at the moment, and then you look at Euro Oz, look at it, it's just you know, ripping higher at the moment. So
yeah, so the next high we've got is way up at the almost $2, which was back in 2020. We've broken the high of August 24, broken the high of August 23. Why do we keep topping out in August? Broke the high October. Yeah, not far. October in 2020 as well is where we found that. Interesting. In fact, I just found a seasonal play.
There we go.
We top out in August. August is the year we top out in Euro Aussie. There you go.
Yeah.
That's fascinating. I've gone through even 2019, topped out in August. I'm getting carried away. 2018, the beginning of September, end of August. Look at that. August is the
top then, so we should buy till then.
buy till August. But no, look, that pretty much sums up what is happening. It's no one really knows. Germany, for me, has been flipped on its head from this week. I don't want to touch it to you've been given an you've been given an opportunity. If you can capitalize on this, you can become a superpower very quickly. And I think they will. I really do think they will. So DAX, any kind of German companies, even I don't know about the euro. I do think they'll carry it a little bit. I don't know if it's out of the bin for me. It just takes one little bit of escalation on the Ukraine front, and all of a sudden the
tariff front.
There's still, I wouldn't say it's out of the trouble, but it's definitely on the way. Would you say the euro's out of the bin?
No, I would say everyone got a bit overexcited. And I think maybe they saw this as a big point to maybe just go, okay, we need to just get out of this move now, because there's been a kind of stagnation in tariffs, but it kind of has been a bit of stagnation in tariffs. There is a potential tariff coming. Again, it's kind of like in the air. Is it coming? Is it not coming? German data is still not great, and it probably will not be great for like the next sort of 5 or 6 months. So
the prospect has altered, not the data.
Not the data, no. So I think the market's jumped on the prospect of something changing, but it's not. There's still a lot of risk here. There's still a hell of a lot of risk for the euro and Europe in general. So, what if suddenly Dole turns around and goes, okay, well, I'll start whacking 25, 30% tariffs on all sort of German goods and whatever. Germany rely quite heavily on selling
manufacturing cars.
So that would really put them back on the struggle bus again. So I don't think it's out the woods yet, but obviously there is some optimism around, and the market's kind of jumping on the optimism at the moment.
And where else are you optimistic right now?
Don't know.
Which leads me, actually, I think I'm about to build a crypto portfolio.
Oh,
I know. I think I'm going to dabble.
What's happened to you?
I'm going to dabble. No comment. But I think I might dabble. Just a little bit.
Why?
Just a little bit.
Why the change?
One, cheaper prices. I'm a sucker for a good deal, right? And the come down that we're seeing at the moment gives me a great opportunity to diversify into assets. If you give me a discount price, I'll take a discount price. And then the biggest one was I was sent a 72-page document from a very, very accredited investor. It was a friend of a friend who sent it over. It's I can't go on camera, but I can tell you after. Anyway, this person had sent me this document explaining what he thinks of it all, and the upside if it does what its task is, the downside if it doesn't, and weighing those things together based on his information. I've gone, okay, I think it would be worth holding some in some regard to know that someone of this person's stature and intelligence is not an all-in crypto bro saying this is the future. He's looked at this in a very systematic way and looked at it for what it is and what it could be. And I find that I like that. I like data. Yeah. I like information. I like as I said, my biggest problem with crypto was I didn't have a reason. I like macro trading. I like a reason, and I think this gentleman has given me a reason.
Yeah, I mean, let's be fair. Like, big hedge funds are getting into the space. They're not putting huge risk up. It sounds like a lot of money's coming into it because they have a lot of money to do stuff with. So, it sounds like tons of money, but it's like probably 5%, less than 5% of their portfolio is going anywhere near it. I think that tells you everything you need to know as well, is kind of like, okay, well, it's probably good to have some just in case something does go, but we're only going to put a minimum risk on it or a low risk,
that's where I'm looking at. I'm not throwing my whole portfolio at it, although looking at the XJO, it might be time to. But I am giving a nice portion, but not too heavy. Last thing to leave you with. Oh, sorry. No, you go.
Oh no, I was just going to say I've got this is a little funny side bet account that I've just opened. I'm dabbling on shorting a few cryptos.
Oh yeah. Oh, there you go.
Bitcoin last week, and it did quite well. Only in this kind of, and I'm kind of looking for the
fear.
So I'm just kind of going for like a risky big hit trade. I fancy one of those.
Oh, like every crypto investor ever.
Yeah, exactly. So, why not join the bus, I guess. But I think like let's say this is a deeper situation going on in the market and it does start to crumble away. I think risk assets are going to get hit hard. I see I might be wrong, but I see Bitcoin as a risk asset. So if that does tumble, I want to try and short that, to be honest. If, however, we get the rebound, I think there could be something good there as well, because if people are looking for risk on at that point, where they're going to go, they're going to go to something like crypto, aren't they? To try and do that. So I think crypto is going to have its benefits and negatives like every other market. Do I believe in what crypto is? Not necessarily, but because I do think there's a lot of contradictions in the market, and I think there's a lot of contradictions in general of what they believe it is and what it can achieve. But at the same time, it's an asset that can be utilized. So if it's an asset that's traded, why not?
Easy. I did one last little thing while you were talking before. Euro Aussie dollar topping out in August
is a thing.
Oh, I can't.
It's not on the screen.
There you go.
Okay.
Thing. It's a thing.
It's a thing.
August.
There you go.
Right here. There you go. Look at that. Guys, thanks for joining us once again. Remember, you can find us everywhere. Top link in the description to join the mailing list as well. We'll be back very shortly. Actually, you're going over to the London live trading floor, aren't you? You're going to join. So if you guys want to keep hearing from John, head over to London live trading floor. It's a bright blue logo, and you'll see John hop on stream over there. John, it's been a pleasure, and I'll chat to you soon. Easy. Take care, guys. Thanks.
Bye.